Morning. Yesterday, Bitcoin fell below 30,000 US dollar, but unlike previous time, it didn't immediately bounce back up. And this definitely doesn't feel great, especially for any investor that would have gotten in say January of this year and is now undoubtedly not just in reduced profit, but actual loss. If the channel we're in endures down, Bitcoin prices might have to go in the mid 20Ks or even the lower 20Ks. Ultimately, that's not a bad place to be at. Less than a year ago, most crypto investors were wondering whether we would reach, whether we would top that milestone coming from the 10 or 12K. As a multi-year holder and a long-term investor myself, I'm not changing my tune. I'm happy to hold and even actually buy on the way down. Most of the money is made when there's blood in the street, even if it's your own. Now, to have a more positive commentary though, I do think that yesterday's move was actually more driven by macro and traditional markets and the pullback they've experienced rather than any particular event in the crypto space. The news flowing through the crypto space actually remains decidedly positive, with more firms allocating, more infrastructure players getting set up for crypto, and also more investments in general. Like just yesterday, we heard of FTX raising or closing a 900 million capital raise at an 18 billion valuation. That's some serious money invested in the industry. In other news, a new mining ETF just launched on the NYSE Arca, enabling investors to allocate to the network and the miners, which of course, are growing in the US, especially following the fall in China. We also heard rumors of Bank of America clearing crypto ETPs for hedge funds in Europe, maybe 21 Shares or the ETC group. Away from news and towards on-chain data, fascinating to see actually the migration from short-term hodlers or holders rather to long-term hodlers. Probably, the experience of the past 3 or 4 years has left a legion of investors unfazed by large drops, and so many people are just holding, including yours truly. Broadly speaking, the liquid supply also seems to be decreasing, highlighting a period of accumulation instead of a flat-out panic or capitulation. But maybe we do need to reach a capitulation before we can go back up. Lastly, on a more bearish note, it does seem that miners are selling despite lower prices. Now, that doesn't feel good. It might just be a function of the recent crackdowns and the movements in mining operations and needing to free cash, but that's not a really good sign. That's all for me today. I wish you a great day and a great trading day nonetheless. If you haven't done so yet, please like, please subscribe. It helps with the visibility. Also means you'll be updated when new videos come out.